Investors were really hoping for a strong start to the year, but that's not what happened on this first trading day of 2025.
It looks like all the major indexes closed lower.
That's right. The S&P 500, the Dow Jones Industrial Average, and even the NASDAQ Composite.
So it seems this losing streak that started in late 2024 is continuing.
It definitely looks that way. What do you make of this downturn after such a strong year in 2024 for the stock market?
Well, the fact that we didn't get a Santa Claus rally this year is definitely noteworthy.
I agree, especially since that traditional year-end boost usually instills confidence in the market.
Exactly. But seeing it absent this year, it really seems to suggest there's been a shift in sentiment.
And then there were those huge swings we saw with the Dow Jones.
Oh yeah, swinging over 700 points between the high and low for the day.
Does that kind of volatility usually indicate a larger trend?
Intraday swings that big can definitely point to uncertainty among investors and even potential instability in the market.
Plus, we saw some pretty big drops in individual stocks. Tesla down 6.1%.
That's right, after they announced those disappointing vehicle delivery figures.
Is this a sign of trouble ahead for the entire electric vehicle market?
Well, when you combine that with Apple's 2.6% drop, it really makes you wonder.
Especially with those iPhone discounts they're doing in China and that privacy settlement.
Absolutely. And it all suggests there could be some concerns about how the tech sector is going to perform in the future.
Even Boeing had a bad day, falling 2.9%.
Of course, that was after news of the plane crash in South Korea.
So with all this negative movement, are there any sectors that are actually performing well?
Actually, yeah, nuclear and solar energy stocks did remarkably well.
That's interesting. What do you think that indicates?
It could be a sign that investors are starting to shift their focus.
Away from tech.
Possibly. It could be that they're looking towards more sustainable and resilient industries.
So are you saying those sectors could offer more stability?
Well, look at Constellation Energy. They just secured a big government contract.
And Texas Pacific Land Corp also saw significant gains.
Right. And don't forget about First Solar and Enphase Energy, both doing well in the solar sector.
It does make you wonder if investor sentiment is moving away from those big tech companies.
And maybe towards sectors that feel more stable in the long run.
Maybe investors are thinking more about long-term trends like sustainability.
Especially with all the government investments we're seeing in infrastructure and clean energy initiatives.
I think it's safe to say that these recent events and market uncertainties are having an effect on investors.
And then there's the development with the 10-year Treasury yield.
Reaching nearly 4.6%, that's a significant jump.
It definitely is. It could even make fixed income investments more appealing to certain investors.
Especially the ones looking for stability.
Exactly, because higher bond yields create competition for stocks.
So you're saying investors might move their money from equities to bonds?
It's possible, especially if they think the risk-reward ratio is more favorable with fixed income.
So what effect could this have on investor behavior?
Well, they'll likely be a lot more cautious and selective with their investments now.
So you're thinking they'll scrutinize company valuations and financial health much more closely.
I would say so.
Basically a flight to quality.
I think that's a good way to put it. Makes sense, doesn't it?
It does seem like a natural response when there's so much uncertainty in the market.
You've got the lack of a Santa Claus rally, the market's still trending downwards, and now bond yields are rising.
It all adds up to investors feeling a lot more cautious right now. And what we saw with the tech sector today, that just reinforces it.
Do you think this cautious approach is justified given everything that's happening?
I'd say so. The market is definitely in a period of adjustment right now. Investors are reassessing what they expect and making changes to their portfolios.
And that explains why there's such a focus on quality and stability.
For sure. But remember, market sentiment is influenced by so many things.
It really is. You've got economic data, corporate earnings, geopolitical events, and even investor psychology all playing a part.
Is there any way to tell how long this cautious phase will last?
It's tough to say for sure. Trying to predict market sentiment is always tricky.
But given all the events we're seeing right now,
I think it's safe to say this cautious approach could be around for a while.
unless something happens to shift that sentiment.
Right. Are there any potential catalysts you're thinking of?
Well, we've got some important economic data coming out soon. Inflation and employment reports, for instance.
Those could definitely have an impact. It all depends on whether the news is good or bad.
What do you think the market reaction would be if we get some positive indicators?
If the numbers are good, investors could start feeling more confident. We might even see a market rebound.
But if the data is weaker than expected,
That could make things worse. Those concerns we're seeing now, they could really get amplified.
which is why I think corporate earnings announcements are going to be even more important now.
Absolutely. They're going to play a huge role in shaping market sentiment going forward.
Companies need to deliver some strong earnings reports. That would really boost investor confidence.
It could be the catalyst the market needs to start recovering.
But if those earnings reports are disappointing,
Well, that could make the negative sentiment even worse.
so what specific things will you be paying attention to to in these upcoming earnings reports?
For me, it's all about revenue growth, profit margins, and the guidance that companies are giving. I'll be watching those closely across all sectors.
I imagine the technology sector is going to be under the microscope.
Especially after how those big tech companies like Tesla and Apple have been doing lately.
Investors want to see if they can turn things around and regain their momentum.
And we can't forget about the energy sector either.
Those nuclear and solar companies have been doing well.
Exactly. So we'll be watching closely to see if those gains are sustainable.
No matter what happens, the market is going to react. And right now, it's super sensitive.
That's true. Any surprises, good or bad, could have a big impact.
So what does that mean for investors?
It means risk management and diversification are more important than ever.
But volatility can create opportunity.
Right. That's the other side of the coin. For investors who are prepared, market downturns can be a good time to buy.
Especially for those who are thinking long-term, but they need to do their research.
Thorough research and due diligence, that's crucial before making any investment decisions right now.
So where should investors be looking? What sectors are showing resilience?
Well, think about the sectors that are aligned with those long-term trends. Renewable energy, for example.
Infrastructure, healthcare. Those could offer growth and stability, even with all the market fluctuations.
Exactly. And for investors who really want to mitigate risk, they might consider diversifying into alternative investments.
Things like real estate, commodities, or private equity.
Those could provide a hedge against the volatility we're seeing in the stock market.
So to sum it all up, the stock market is facing a lot of challenges right now.
Rising interest rates, geopolitical tensions, and investor uncertainty, it's all contributing to that cautious sentiment we talked about.
And the performance of the different sectors shows how important diversification and careful stock selection are.
So what's the key takeaway for investors?
Stay informed, be patient, and keep your focus on your long-term investment goals.
Because the market's trajectory is uncertain, it depends on so many factors.
Economic data, corporate earnings, investor sentiment, they're all going to play a role.
So investors need to be prudent and adaptable.
And always stick to sound investment principles.
Because navigating this market, it's a challenge. But if you understand the forces at play, you can make better decisions.
And you'll be able to weather those periods of volatility that are bound to happen.
Stay engaged, keeping up with market trends and economic developments, that's essential for any investor.
Especially in a landscape that's constantly evolving.
Investing is a journey, and it's a long one. You're going to see short-term market fluctuations along the way. That's inevitable.
But if you have a disciplined approach, focus on the fundamentals, and stick to your investment strategy,
then you're setting yourself up for long-term success.
This first trading day of 2025 has given us a lot to think about.
It's all part of the process.
So even though we're seeing this volatility right now, it doesn't mean long-term investors should abandon their strategies.
Exactly. Those long-term goals, those are what matter.
This first trading day of 2025 has really highlighted some important lessons for investors.
It definitely has. Staying informed, being adaptable, that's crucial in a market like this.
Especially with the landscape constantly changing.
There's always something new to learn and adapt to.
Well, I think we've covered a lot of ground today.
We have, and it's given everyone a lot to think about as we move forward into the new year.
Until next time, goodbye.